Hey folks, Dan Frio here, the Mortgage Update. Today is April 8th, 2020. I gotta be short. It's my 31st anniversary and my wife, she thinks I'm in the bathroom, I think. So don't go away. We'll be right back and I'm gonna go through all the numbers today. Okay, so what happened today in today's market? Well, the MBS mortgage-backed securities were up 19 ticks. We love it. For those new to the channel, you're hopefully here to watch or monitor mortgage rates. And you might be a realtor, you might be a mortgage advisor, you might be a consumer looking for some help, and hopefully I can help you. And if you always reach out to me, I promise you, if you click down below and leave a description or a comment, I get back to everybody. It might take me a couple days because I'm getting so many of them, so thank you so much for that. But if you want to email me or give me a phone call, I'll give you all that information at the end of the video. So why do we watch this number right here? Well, the main reason is this is the number that actually determines mortgage rates. It is not the 10-year Treasury. It is not the prime rate. It is not the federal funds rate that the Federal Reserve controls. It is this number right here, okay? So basically, a quick explanation of how this works is as this number goes up, it's the price that people pay for the bond. And you're paying for a bond, it's an investment. So how bonds work is the more money you pay for a bond, the less yield or rate of return you get. The yield equates out to the mortgage rate. So whatever yield it's being produced, that's how mortgage rates are calculated. Okay, that's the easiest explanation I can make. So we love when this number goes up. So what happened today in the markets? Ooh, I apologize. Let me go to the chart. I try to refresh this as quick as I can because sometimes the data is delayed a little bit. But let's see what happened in today's market. So this is the last quarter of what's going on. Here's one of the things that my followers, I try to explain to you. We love in this business right now, stability. And look from this date, this was the lowest date basically, or the lowest rate ever in history, happened on this day, okay? And that was just a couple weeks ago. Let's see where we are right now. I apologize, that's not the straightest of lines, but we're right there. And that's basically the Federal Reserve, and I'm going to show you some information on a couple other analysis that we run through, is the Fed has finally figured it out. What they were doing is they were overreacting to the markets. They were buying too much, and that was creating a over demand of the market. And then they stepped back out, and they weren't buying, and then that crashed the market. So they're finally getting it. We love stability, and that's why at preferred rates we and I'm going to go through that also a little bit later. We have the best rates in the market right now, and I can't believe it, on conventional financing as well as government financing. And if you go back to my last 2 days videos, I go over our rates compared to almost every lender in the country, and we're killing it right now with rates. And what I also want to go over with you is don't be bamboozled on all the small print on how much you might be paying for what you're getting as a mortgage in regards to rate and fees. But let's go over what's happening right now. The trend is awesome. It's stabilized. Okay? So today in the market, the Dow is up almost 800 points. Great. But the nice thing is mortgage-backed securities also ended the day up 19. Usually you don't see an up stock market and an up bond market. But the big caveat on all of this is right in this section right here. This is what I want to discuss. Might be a little bit hard to see if you're on a cell phone or something, but the Fed stepped in and bought up $22 billion of mortgage-backed securities. And again, it's basically a supply-demand chart. They're finally figuring out, okay, there's X amount of supply. We go in and we bid up the market to this point. So that's the demand. They're finally figuring out how much they need to buy to stabilize the market. And that's what they're doing. So they bought $22 billion in mortgage-backed securities today, which is half of what they planned on buying. But if they would have bought $42 billion in mortgage-backed securities, it would be way over demand. the bond market would have crashed. It creates chaos in the home markets. So the silver lining behind all of this is, yes, we have the pandemic, we have the coronavirus, but if it wasn't for that, and again, I'm not saying this, I don't want a pandemic to make this happen, but the silver lining behind this is the Fed has stepped in to stabilize the markets and is creating an opportunity for home buyers and homeowners. I mean, basically a once in a lifetime opportunity at these rates. They've never been here at this level since they started tracking mortgage rates years and years and decades ago. Okay, so I'm not going to go through any of the economic data, because until all of this subsides and then they allow people to get back to work, restaurants to open, factories to open, the numbers are going to be horrific. Manufacturing numbers are bad. Inflation numbers are in check, but the unemployment and employment numbers are terrible. So again, if you lost your job or you're furloughed, God bless you. I hope you get through everything. And like I said on some of the other videos I have, if you're furloughed, you don't have a job until they open back up, don't do the forbearance. Please don't do the forbearance. Give me a call. Let's work with you to get you refinanced. Again, we're refinancing you. If you qualify, I can almost guarantee you that your rate is going to be lower than your current rate now. It almost has to be, because mortgage rates have never been this low ever in history, period. So the good news is refinance, get yourself into a lower rate. And if you're doing fantastic, let's look at shortening your term. But if you're just trying to keep your head above water right now, look at refinancing, maybe pay off a couple bills, skip 2 months mortgage payments, and you'll come out much, much, much better on the other side of this equation when everything is said and done. So we saw the market up 19 today, which is great, and it's stabilizing. Here's my chart. It says 17. This is after hours tradings. You can see it's still kind of trading. It's down 2 ticks from when this chart closed for the day, but this is a little more in-depth here. So let me go through. Here's an article that I wanted to share with everybody today. And it's basically, let's see where I was looking at right here. It's an article they posted right down in here, which is here. And basically, why have points made a big resurgence in the mortgage market? Well, let me define what a point is, and then I'm going to show you on all of the disclosures that you get what we need to look for to make sure they're not sliding this in on you. And I very rarely ever charge points, and if I do, I give you the option if you want to pay them or not. I do not try to slide them in and sneak them in on you. And I'll even go over all these numbers with a fine-tooth comb if that's what you'd like to do. No problems. What a point is it's a percentage. So a lot of the norm out there is you pay 1 point or 1% of your loan amount to get a lower rate. Okay, so I had a consumer today question me on this, and so what I said is I said I'll give you all the options that you have. The rate that I quoted him was 3.125 on a 30-year fixed rate. He said, what would it take to buy down my rate to 3%? And the cost was it was a fairly big loan. It was over $4,000 in costs to get a 3% rate versus a 3.125%. Now the 3.125%, he had virtually no lender fees. Okay, the only cost that he had was approximately about $1,000 in title fees that he can even choose his own title company that he wants to use. So then I went back to him and he asked, what would it be at a 3% rate? So I said $4,000. Then I said, well, the variance in your payment versus that $4,000, it would take you 118 months, so virtually 10 years, to break even. Well, he's out in California, and he bought this house. It's up $50,000, $60,000, $70,000 in the last year, and he's already contemplating possibly moving. So my conversation back to him was, I wouldn't pay $4,000 to save $20 a month. because again, the break-even point in his case was 118 payments, so 10 years. So you can pay points. So the gist of it is, be careful that, in some cases it might make sense, but the majority of the cases it does not. It's helping the lender and not you, the consumer. So let's go and see where you find these numbers. So I just went to a website. I don't know these people from Adam. You can see it's Anytown Street, Anytown somewhere Avenue, whatever. So I just Googled this and just wanted to get what's called a loan estimate. This is what, as a lender, we have to legally send you before we can really get the ball rolling on your loan. So let's break it down real quick. I won't go into huge detail, but it will say, your name here, your property address here, the sales price or the appraised value of the home, It'll tell you what the term is. It could be 10, 15, 20, 30-year term. What kind of transaction is it? Is it a purchase? Are you refinancing and pulling out cash? Are you just doing a rate and term refinance? It kind of explains what type of loan it is. It tells us if it's a fixed or an adjustable rate. And it tells us what kind of loan it is. Is it a conventional or a government, which is FHA and VA? Then it tells us if you're locked in or not. Okay, you can see this is an old one because it's 8 years ago. All right. So basically now the guts of it tells us here's your loan amount, here's your rate, here's what that payment would be based on this, and the term up here. That's your principal and interest payment. So now, is there other pieces of your payment that's going to be included? Well, in their case, they have an PMI, which is that number here, and their escrow. That number would represent your monthly taxes and insurance on the home. So that's your principal and interest payment. When you add in your taxes, your homeowner's insurance, and if you have PMI, you add that in here. This is what the payment's going to be. Okay. Then you're going to have PMI for 1 to 7 years, and then it falls off. And then this is what your payment would be. Okay. So that basically breaks it down. And then it says at the bottom, here's where people freak out. It says your estimated closing cost is $16,000. I'm not going to say totally ignore that number, but I'm going to show you where we want to focus our efforts at, okay? So we know the rate because the rate was up here. But again, don't be completely bamboozled over, oh my goodness, that rate is phenomenal. Well, the other piece of the puzzle that we want to look at, how much is it costing you to get that rate? And we scroll to page 2. And right under here, this is the section you want to be concerned with. Right here. Page 2, Section A, loan cost origination charges. Okay? Points. 0.25 points. I see the norm right now of these that I'm getting in is between 1 and 1.25. Almost every time I issue this to you, mine is 0. Okay? Application fee, that's usually normal, and an underwriting fee. Usually there is an underwriting fee, that one's a little high. So in this category, you're probably going to be looking at maybe $1,000, okay? And again, this 0.25 isn't that bad, but I would check and see what rate can I get without paying that amount of money, but that's not that much money. I see many cases in this section here of $3,000, $4,000, $5,000, $6,000, $7,000. So please look at your rate, and then the next thing don't look at anything else. Flip to page 2 and check out the origination charges right here, and that'll tell you how much your costs are. A lot of this other stuff are things that are necessary and aren't a part of the lender's piece of the puzzle. Like when this person is buying a home, so unfortunately you're at the mercy of the attorneys. And they choose your title company. They get you title insurance, your title policy, your title searches, the taxes and government fees. That is your state, county, and city. Your homeowner's insurance. All this other stuff is just stuff associated with your homeowner's insurance, your real estate taxes, and or your attorney fees. That has really nothing to do with the lender. We're focusing on the lender's package to you, the rate, and the fees. That's what we just went over. So I'll tell you a little bit about me. My name is Dan Frio. I do the mortgage update every day. If you're in Chicago, please tune in. I am on AM 1160, which is WYLL radio every night, Monday through Friday, from 7:30 to 8 p.m. It's a Christian radio station that I've been on for 13 years. I am also on WIND radio Saturday mornings from 7 to 8 a.m. That's one of the largest talk radio stations in the Chicagoland area. I post a YouTube video every day explaining things that you guys have asked for, and try to get the truth out there instead of having fake news and the fake mortgage news. There's so much information out there that is just bad. And the forbearance is one of the things, and I'm going to dwell on this for the next month. Please, if somebody's looking to put you into a forbearance agreement, read the small print. Do me a huge favor. Email it to me. I'll review it with you. No cost, no obligations. I promise you, I'll help you with that. And if it's a great deal, I'll be the first one to say, God bless you, take it, sign it. If you can skip 3 mortgage payments, God bless you. It'll help you. Take it. 9 times out of 10, that is not what the letter is telling you. And you're going to wait 3 months, miss payments, and then you're going to get this one payment coupon saying owe all this money. So a recap of forbearance. Forbearance isn't allowing you to skip your payments. It's pushing those payments off to another date. So what's happening right now, a lot of mortgage companies are saying, okay, we'll give you April, May, and June off. And then come July 1st, you need to make your July payment and your April, May, and June payment. So think about coming up with $8,000, $9,000, $10,000 in mortgage payments on July 1st. Probably going to be difficult. The way around that, call me and let's refinance you to a lower rate, maybe pay off some bills, skip 2 months mortgage payments, put yourself in a better position. So my name is Dan Frio. I do the mortgage update daily. You can check me out on YouTube like you're doing now. Please give me a thumbs up and help share this video and help others. If you'd like to reach out to me, easy to get me. My email address is really simple. It's D for Dan, Frio, which is Frio, at preferredrate.com. You can find me on the web. I have a website up now. It's not the primo one, which we were about a week away. We're having some delays because of the pandemic. But you can go to thefrioteam.com or reach me on an 800 number that we have. It is 844-775-LOAN. That's 844-775-5626. God bless. I hope you learned something tonight. And be safe, be healthy. See you tomorrow, same time, same place. God bless. Bye-bye.